now in place in terms of how to execute and break those trades. But what they haven't really figured out is how to prevent the glitch in the first place.
Right.
And that's the real concern here, is that you have computers that are so dependent. We are so dependent on these machines to execute all the trading in these stocks, especially on Nasdaq, where there is no human being exchange, that we don't even know, and it's possible Nasdaq and the SEC are not even aware why this occurred.
We're talking to Brian Korn. He's a securities lawyer for Pepper Hamilton. Brian, so let me ask you this, though. I mean, okay, it's not humans, it's all computers, but the Nasdaq is running an exchange, and a lot of money is traded back and forth on this exchange every day. It's incumbent upon them, isn't it, to get these systems right?
That's absolutely correct. And part of the problem that Nasdaq has and many of the other trading systems is that the number of broker-dealers that access their trading systems on a daily basis and on a minute-by-minute and even tick-by-tick basis is so wide that the possibility that one of them could cause a glitch or inject some sort of virus is a real threat, and it's not a threat that most of us have with respect to our internal business systems. They have been a little bit slow in terms of technical rulemaking, in terms of, on the IT side, exactly how to control this. And part of it is that you do have program trading out there that, and you don't see human beings behind a great number of these trades.
Very quickly, IPO, the infamous Facebook IPO, the SEC fined the Nasdaq, what, some $10 million for, among other things, poor decisions. Could they be opened up to, of course we don't know what this is, but is the possibility of more fines very real here?
Absolutely. I don't see that there will be a lot of investor claims coming out of this, because it looks like everything has just been halted. And if you even go back to the flash crash as an analogy, everything recovered quite well at the end of that day. You don't have IPO. This isn't a window where you see a lot of IPOs pricing, and that was really the big issue with Facebook and some of the others, is that people were looking for the big pop, and the delay absolutely killed the opening. I think here, if things get back to normal within a few minutes, and it looks like they're trying this 5-minute test bid-only process, that your investor really has to have damages in order to push a claim. That won't stop the exchange itself, though, from being fined by the SEC. All
right, great stuff. Brian Korn, securities lawyer for Pepper Hamilton. Dennis, did you want to jump in here?
Yeah, well, one thing that Brian Korn pointed out that's, I think, important to keep in mind is that this wasn't like a flash crash where it was caused by plunging prices unexpectedly, nor was it caused by a surge in volume. This instead is a feedback loop problem.